Hey guys, Mike here. So the Robinhood IPO took place today, and boy was it a fun one. I actually did not buy in, even after getting the email today. Be curious in the comments if you did, but it did make me dive into a little deeper the financials and things of that nature, maybe some pros and cons, and I'll disclose why I didn't get into this. And I don't really do a whole lot of IPOs to begin with, those who know me. And so, let's go ahead and buckle up because it's going to be a fun ride here. And this is a short video, so let's just go ahead and get right into it. And I don't know if that's how you felt today at 12:20, I believe it was, when the stock literally fell off a cliff right at opening right there. But the good news is it did recover, as you can see, and then went ahead and decided to go on the roller coaster ride that most IPOs go on. And so, of course, I don't know if some of you guys felt like that today when you were watching the chart, but that's, IPOs as usual. They're like roller coasters. It'll be this way for a while. And so, some of the pros right off the bat are the fact that this company makes a lot of money. I think in the first quarter, I looked at the financials, 522 million, somewhere in there, and some change. Huge growth rates. But then you go into the cons, and right away, it's got to be one, the business model, right? I mean, they make between 78 to 82% of the revenue, depending on what source you look at, between payment for order flow, right? And this is where companies like Citadel, the market makers, will, Robinhood goes, here you go, here's the order, and they say, well, thanks, here's money, right? And then they make their money off the spread, stuff like that. It's been all over the news, And so the one reason this is a big concern more than ever is the fact that just 2 months ago, here's the SEC chairman saying what he had to say about it.
An app that says that they have zero commissions is earning revenue on your trading. The listeners to your show's trading through something called payment for order flow. Somebody is paying them for that order flow and paying them for that data. We know this is to be true when we go on any application, somebody wants to get our data. But so we're going to take a look at this and get public comment and then see how we might freshen up our rules.
So, Chair Gensler, on that issue of payment for order flow, we've had Ken Griffin on the program, we've had Vlad Tenev from Robinhood on the program, and so many others who've made an argument that because of the lot sizes for retail and the like, that they're actually getting better pricing, is the argument they say, for their customers. And so that they're saying it's not costing the end user. Do you believe that?
Well, there's evidence that shows that there's a conflict. We had a case settled in December of last year where the wholesaler in that circumstance actually had written to the broker and said, there's a trade-off. We could give you more payment for order flow, or we could give you better execution for the customers. A clear sort of trade-off. And there are brokers that don't take payment for order flow. And as I noted yesterday, the United Kingdom, Canada has banned it. So we're going to take a close look as to how the market structure can work best, be most efficient, and protect investors.
And so, of course, that's got to be the big concern for anybody investing in this company is if the SEC steps in, and there's no way I don't see them banning it. But like I said, they tighten up the regulations and rules, and it cuts down and makes it hard for them to do it, since almost 80% roughly of their revenue comes from this. That's not good, right? And so they got to figure out a way to have some diversity there. I don't know how they're going to do it. But, that's a huge concern if I was an investor, of course, in this company right off the bat, okay? And plus, you got retail investors upset. They're pushing it because of GameStop and everything else. And, that was one of the things that happened this morning. I saw I saw it all over Reddit and everywhere else where, people were saying boycott the IPO. We're going to try to borrow money to short the stock to kind of punish them for the GameStop issue. Like people just are, still hadn't forgot about GameStop, all this stuff, And so that was something you also saw this morning. And that would be interesting if, the Reddit crowd actually did short the stock. But the other one has to be the growth, right? And it even says right there in the prospectus, the growth rates were outrageous. I mean, they were crazy in 2020. I mean, they were putting like 400% growth rates and revenues and all this other stuff. I mean, it was nuts, but it says most likely that's not going to continue. So we don't really know what their growth rate will be in 2021 and 2022. And as you can see right here, you see the user rate actually dip off right there in March. And I am really interested. See to the far right how it's growing. It levels off January, February in the first quarter, and then it drops off in March. And if you remember, that actually is when, of course, during this time frame, starting February 12th, going through May 12th, 3 months of high growth stocks selling off like crazy. So you had a lot of people getting margin called, a lot of people upside down, frustrated, mad, right? And so, views on YouTube are going down, everything's going down. Well, I'm very interested to see what happened in April and May and in their June numbers. As far as them having signups, because their number one way to get signed up in their perspective, they said, is like, I think it's like 75 to 80% of their users are either referred or come organically in some way, shape, or form. So that keeps it cheap for them as far as like, obtaining customers. But if those active users signing up are decreasing, and of course that means there's less referrals coming in as well, that could be a problem. So I'm really interested to see the second quarter numbers on that. Now, the last one was the financials. Here I'm thinking, before I even pulled these up in their perspectives, I said, their margins got to be killing it. I mean, they got to be killing it, right? I mean, it's kind of like a low-cost type of business or whatever. Got to be killing it. And, boy, I was really surprised to see this. But I don't know. Hopefully you can make this out. Try to make it as big as possible. But if you look right here, I said they make a lot of money, right? In 2020, almost 958 million, almost 959 million. But look how much was their expenses. 945 million. They got to keep 7.5 million out of basically almost $1 billion. I mean, that is not good. That's 1.4% or something. The good news is in 2021 they can keep this up. Again, a lot of money, 522 million in revenue. The expenses 463 million, which is still massive. Well, at least that increase, I mean, for that quarter, that's a little over 11%. And so, hey, 11% is better than 1.4%. But I just expected way bigger margins. I just thought it would be. I mean, but no, it was not. So, they got to find a way to increase that. But then again, your number one source is payment for order flow, right? And so it's 78 to 82%, somewhere in that range. And so, I don't know how they're going to do that. So something else I'm curious about, how are you going to increase your margins? And so I don't see, the CEO and all them and cutting employees' pay, and the CEO taking pay cuts. And I mean, they got to, obviously, there's a lot going into tech and development. If you look at that one, general administration's a huge expense for them. Marketing is going up, because that's the one thing is, if to keep the growth going, they're probably going to spend a lot more on marketing than what they are now too. So it's something to look at, but that's kind of a concern as well. And so looking at those things, that's basically why I just said I'm going to sit on the sidelines and be good to go. And plus, I can honestly it would not shock me a bit to see, the Reddit group, the Wall Street bettors, absolutely short this stock. I mean, it wouldn't surprise me, and I wouldn't blame them, right? A lot of people who got burned on that say, okay, now it's our time to get you, right? And so who knows? It will be interesting to see. I think it will be a storyline eventually this year. It would not surprise me a bit. Another reason is, I don't know. I mean, I ain't, I'm not a tactic guy personally. I don't care for the CEO. Whenever I see him speak, I don't think it's words he came up with. I just feel like he's being handed a script to go out there and please say this, and I see market makers behind him or something. I can just see market makers behind him just saying, here's what you need to say. Because they're his business, right? And so he can't upset them. And I don't believe the whole we're protecting our clients and all that stuff. Like, I don't believe that. So that's a whole nother ball game. But I don't know. Maybe you do. Let me know in the comments. I just don't. And so there's plenty of other companies to play on this. And if you are in it, I hope you make a lot of money. I really do. I'm rooting for you. I just choose to set this on the sidelines. That's just me. Okay. And so go forward, be strong, and make money, okay? Do your thing. And, just buckle up for the ride, because this is what IPO is all about for like 2 to 3 months. They're a roller coaster. That's how it goes. So we'll see how it goes, and hopefully you got some out of it. Hit the like, subscribe button if you did. Let me know your pros and cons of the company as well and what you're doing, all right? And I will see you guys later on.